So one key indicator that we're watching at the moment for the health of the economy is consumer sentiment. It's really a key for the industrial part of the market, which we focus on here at Wilson Asset Management. I mean, our sort of anecdotal feedback is that conditions remain quite anaemic out there, that the interest rate cuts so far to date have not had the desired impact on stimulating economic growth here in Australia. We see that more interest rate cuts are needed and will come here in Australia throughout the rest of 2015, which could spur economic activity again and really drive earnings growth amongst a lot of these Australian industrial companies. Look, I think that the US economy is recovering, albeit very, very slowly, and the Federal Reserve, quite rightfully so, have been reluctant to push up interest rates at any great speed. Current consensus at the moment is that interest rates will increase in September, which has been consistently being pushed out for the last year or so, and we actually think it might happen in 2016 with the Federal Reserve. And if you look at the dot plot, that we think they'll take a more conservative stance, so that all bodes well shorter term for the Australian dollar, albeit we will be cutting rates. We can see that the Aussie dollar trading around these current levels in the high 70s. Look, I think that there's certainly scope for more Chinese stimulus as we go forward over the next 12 months as they look to maintain their strong history of economic growth, which is forecast to be around 7% again for this year. Certainly any stimulus that does come out will certainly, we think, could bode well for the commodity sector, but I don't think it's going to be the magic ingredient or potion needed to get the commodities space and resources stocks here in Australia to have a large sharp rally and outperform the overall market. Oh, look, we are sifting amongst some of these mining services companies at the moment that have strong balance sheets and look as though they may be able to ride out the cycle and have relatively strong visibility on work for the next couple of years. So we are currently going through the mining services space as we speak, as we've done for the last couple of years, and trying to find any opportunities that may present themselves.